If you're wondering where to invest in Australia, whether it's New South Wales or Victoria, then you've clicked on the right video because I'm going to explain it piece by piece for you. And the market has definitely shifted away from Queensland, away from Perth, and investors and home buyers are looking for the next location that is about to boom. But this video is more or less a reality check, and I'm going to help you decide whether or not you should be looking at Victoria or New South Wales and help you guide into your next investment property. And you need to make sure you watch the entire video to completely understand every single aspect I am talking about. Because if you just watch one part of it and then click off, then you're not going to understand the whole story. And it comes down to a couple of main aspects, including acquisition cost and holding cost, the yields, tenancy laws, and market cycle positioning. These are important factors which distinct New South Wales and Victoria, and they're going to help you decide where to look at. And just to summarize, New South Wales has some very good regional locations to invest into, and some of them include Dubbo, which you can see over here. Some of them include Wagga Wagga, as you can see here, about a 70,000 odd population. And then right on the border of New South Wales and Victoria, you've got Albury-Wodonga. In similar fashion, in Victoria, you've got places like Bendigo. You have places like Ballarat, which you can see here, as well as places like Shepparton, which are all good regional hubs of Victoria, which are about 2 hours away. But then you really have to ask, how the hell do I decide which location to choose? That's why you watch this video. And before I go into that breakdown, if you have not already and you need that assistance to guide you into your next investment property because you are struggling, then you need to connect with like-minded property investors within the private community where there's over 140 members sharing knowledge, tips, expertise, all for the price of just $35 a month or $1 a day. That's an absolute bargain. So if you're looking for your next investment property, then you need to join. And it's an absolute no-brainer, and there's a 30-day money back guarantee. So make sure you jump into the community and you get the assistance that you need to get the right investment property, because you don't want to make the wrong decision because it's going to cost you hundreds of thousands of dollars. So what is $35 for your next purchase? All right. So what we're going to go into is actually talking about the acquisition and holding costs between Victoria and New South Wales. And I've got a couple of examples here. I've got this property here, which is in Lavington, which is in Albury-Wodonga. So in this really nice pocket here, this is where Lavington is. And Albury is a nice regional hub. And I'm going to compare it to this property here, which is in Golden Square of Victoria, which is in Bendigo. And if you don't know where Bendigo is in this location about 2 hours away from Melbourne, and there's a train line to it. So a very, very good location to invest into. But let's talk about the important aspects of acquisition and holding cost. So if we have a look here, this property under offer roughly for $470,000, assuming we have a 20% deposit, it's going to cost us roughly $115,000 to purchase this property. And you can see stamp duty is about $16,000, which is all the standard fees associated with it. And what I'm going to do is I'm going to pull this up. And on this other side here, now that I've just opened this up, you can see the property in Victoria in Golden Square was roughly $475,000, or we'll put it at that mark. It'd probably go a bit more than that. So $470,000. The stamp duty is actually $24,000 compared to $16,000. Now that is a very large difference. You're almost paying $10,000 extra just to enter into the Victorian market. Why is this? It's because they just have higher stamp duty. And the way you can actually check this out is simply by going to an online stamp duty calculator, where if you type in the property $470,000, New South Wales, investment, you're not a first home buyer, you're paying around $16,000. In Victoria, you're paying the same, about $25,000. So a $10,000 difference. And that's a lot of money. And it's going to stop 90% of people from investing into Victoria. However, as a smart property investor, we need to understand that this is a cost of doing business. And the reason I say this, say we invest into Victoria, for example, and it costs us $10,000 extra to increase. But if we buy in the right location at the right time, that property could increase by 10, 20, 40, $100,000 in the next 1 to 2 years. So then realistically speaking, what is $10,000? It's not that much in the grand scheme of things. But I can understand that there is a mental barrier between paying $115,000 compared to $120,000. And I can understand the point, because when you're talking about $600,000 properties or $800,000 properties for an investment, you're paying a lot of money in terms of stamp duty. But the reality is that this is a cost of doing business. So when you compare the buying cost of $115,000 versus $120,000 for the same or equivalent property between New South Wales and Victoria, it's about a $10,000 difference to enter the market. And honestly, that shouldn't stop you from investing into Victoria. Now, what's the other major difference between New South Wales and Victoria? And that is the land tax associated with Victoria. Now, land tax is an unfortunate cost the Victorian government imposed on investors to recoup some of the costs they acquired during COVID. And it's really annoying. But at the end of the day, this is once again a business cost, right? This is the cost of doing business. If we shift our mindset from looking at property investment as something we just invest into, and we shift it into a business mindset, then we can understand that this is an expense to the business that we are running, right? And we need to make sure that the numbers make sense. And once again, if we say Victoria is the place to invest, that is where the market is going, that is where the market is going to boom next, then what is $1,500 when it comes to land tax, right? That is an adjustment in your expenses. And just to put this in perspective over here, if you have a land taxable value of about $250,000 or $200,000, you can clearly see via this contract that it's only about $1,000 in land tax. So that number is very negligible. And it's just the cost of doing business that you need to account for. And if we put the land tax taxable value of $250,000, you're paying about $1,000 in land tax, which is not a lot at all. And to be completely frank, if $1,000 is going to break or make your property investment, then it might not be for you, because you need to account for these sort of expenses that you know even before purchasing into the area. So when you break down the expenses of buying into New South Wales and buying into Victoria, the main difference that you're going to have is land tax, which is about $1,000 to $1,500 difference when you're purchasing around a $500,000 asset. And that should not honestly decide or dictate where you invest, whether it's Victoria or New South Wales, because that is a maths calculation. And believe me, I know it sucks. When it first came out, I was like, what the hell is this? But at the same time, when you take a step back and you really think about why you're buying property, what is the goal of buying property, at the end of the day, it's to make money, have capital growth, and have decent cash flow. It honestly shouldn't be a deal breaker. So this is just my general advice, I would say. It's not to be a deal breaker for you guys. So that's what comes to acquisition and holding costs. Now, there is still more to understand about whether you should invest in New South Wales or Victoria, and you need to watch through the entire video to completely understand what I am talking about. And before I go any further, if you are watching my videos and you are enjoying the content and wondering how I learned and what I learned and whether or not you can do the same thing without having to pay tens and thousands of dollars for a property course or a buyer's agent, then you need to purchase the Property Blueprint. Now, this is a property education system which contains 50 plus videos, 5 to 10 minutes long, which will teach you about property investment, all the tips, tricks, and of the trade, and how you should approach your investing strategy. Right? This is not another $5,000 to $10,000 course or another $5,000 to $10,000 program. It is literally $299 on pre-order. And the reason I am doing this so cheap is simply because I want to make the barrier of entry into property investment even lower. Now, as part of the Property Blueprint education program, you will also get 6 months free access to the private community, which is worth over $200. So you're already getting an instant bargain simply by joining this program. It's an absolute no-brainer. There's about 8 modules with over 10 plus hours of content, and it is very, very affordable compared to all the other courses, programs, and buyer's agents fees out there. And this is really for people who want to put the time and effort in to learn about property investment and not to be led blindly. I'm not here to rip you off. I'm not here to sell you a scam. I'm not here to promise you a bright and brilliant future, but I am here to be honest. I'm here to share my information and put my integrity on the line and give you something of value for a very cheap cost. That's it. Let's get back into the video. Now, the next part I want to talk to you about is Victoria's minimum rental standards compared to New South Wales. Victoria does have tighter, more stricter rental guidance. The laws are geared towards renters rather than landlords in Victoria. And what is the impact of them? Well, the impact is that when you do have difficulties with tenants, the laws support them. You can be in more stress because of all the minimum standards, the process of going through VCAT if something bad does happen or you have a bad tenant. And honestly, it can happen to anyone. And New South Wales just has that slightly less restrictions and has a bit more, not favor, but I would say a bit more balanced approach between renters and landlords. Hence, a lot of people do prefer to invest into New South Wales for that reason. Again, it's not a deal breaker to stop you from investing into Victoria. This is where you have to be intelligent about the way you go to do things. One, find a good property manager. Number two, you need to get that property manager to find you a good tenant. Number three, make sure your property is up to the minimum rental standards and make sure it's good. Make sure that you cannot be questioned. And to be honest, everyone should have the right to live in a good property. It's not a disgusting requirement to ask from the Victorian government. It's actually quite basic. And so honestly speaking, if you buy the right property with a good foundations, good basics, good renovations inside, it's got the minimum standards applied to it, it honestly should not be a big deal. Now, there is obviously the more annoying compliance cost when it comes to Victoria, but that once again is sort of the adjustment that you need to consider and the cost, which is going to be around $500 or so every 2 years for most expenses, which is a cost you should consider, but again, not that deal breaker type adjustment. So there are tighter tenancy laws in Victoria, but it's not something that I would say should be a deal breaker. It really comes down to what property you select and how good that property is, whether or not you need some renovations or anything like that. You should always factor those in even before purchasing that property and signing the dotted line. You can usually tell with your property manager whether or not you'll have compliance issues or tenancy issues within the area based on the property you buy. And you need to do this in conjunction with the property manager to help you out with it. All right, so that is point number 2. And that's about tenancy laws. And I went through it briefly because it doesn't need a big dissection of it and shouldn't be a deal breaker between investing in regional New South Wales or Victoria. Now, the next one is, I would say, a bit more key, and that is about market cycle timing or market cycle positioning. In New South Wales and Victoria, both locations during COVID, they went through quite a significant rise in property values during that time, from about 2019, 2020 till about 2022. And then it kind of went into a slump, or so to speak. And this is actually reflected. And I'm going to show you a couple of examples here. If I look at Wagga Wagga in New South Wales, you can see that over the past 3 years, it's grown about 31%. And if we look at all of it, in 2019, or if I click on 5 years, apologies, from 2020 to 2022, it went through a significant rise as well, and then it hasn't slowed down. So meanwhile, all the focus has been on regional Queensland and Perth, Wagga Wagga in New South Wales has been steadily growing month on month. And it's still growing. It's had 8% growth last year, which is quite significant. It's been overshadowed by Perth and regional Queensland because of the 30-40% growth. But Wagga Wagga has been consistently performing. In fact, you can see that over the past 10 years, at 10% growth every year, it's overperformed. And that should raise questions for us. It's already overperformed. Whereas when we look at regional Bendigo, for example, over here, and I'm just going to go to the Greater Bendigo City so we capture the LGA of it, and we start to scroll down, we can see that during 2020, it went through a boom, much like regional New South Wales did. However, it's gone through a huge flat period. It's gone for about 3 years of flat growth. And over the past year alone, it's only grown 1%. And over the past 3 years, it's only grown 3%. So in terms of market cycle timing, this has been a lot more flat. And over the 10-year growth, you can see it's averaged about 7%. So not terrible by any means. It's actually quite good. However, not as good as a place like Wagga Wagga, which has overperformed, you could say. And this gives us questions about, okay, so Wagga Wagga has grown quite a bit during COVID. It's also grown over the past 3 years, while Bendigo grew through COVID, but then it's gone quiet. Does that mean we should be investing into Bendigo? That's a great question. And it's something we should consider doing because of its timing in the market. We are approaching it in a more counter-cyclical approach. Now, obviously, Wagga Wagga is just one example. The other example I want to show you is Albury. Albury has a very similar sort of trajectory to compare to what Ballarat had in Victoria. And if I look at its growth, in COVID, it went through a massive boom. It kept on growing. And then over the past couple of years, it's actually been dropping. And it's had minus 8% growth in the past year. And it's starting to sort of flatten out, as you can see in the 1 month and 1 quarter growth. That's good, right? It's starting to flatten out. And you can also see that over the past 10 years, it has overperformed as well. Now, obviously, you want to buy markets within markets, and this will capture in everything. And some of the locations that I even consider investing into is areas like North Albury, Lavington, and places like that, as well as in Wagga Wagga as well. And the point I'm trying to make between regional Victoria and regional New South Wales is that it is very similar in where it is in terms of the market. It's all gone through a massive boom during COVID. It's gone through arguably a flat spot or it's declined, for example, in Ballarat, and now it is starting to flatten out and it's looking with positive signs. There is more activity happening in Bendigo that I can say from our community where people are actively looking to buy. In Albury Wodonga, I can say for certain that properties are going under offer very, very quickly from both investors and home buyers and owner occupiers. And these markets are starting to pick up because the market is shifting and people are looking other places apart from regional Queensland and Perth. Now, does that mean you're going to have overnight growth? Absolutely not. These things take time to develop. Market shifts happen every 3 to 6 months. So it's a long-term game. So it takes a while for things to happen and you need to be there when it does happen. If you're sitting here trying to pick between New South Wales and Victoria, you need to look at what your portfolio is sitting at. If you already have a property in New South Wales, then I would start to actively look into Victoria because there are certain markets there that have great opportunities. But if the land tax and stamp duty and the tenancy laws are a real deal breaker for you as an investor, then you need to start looking at regional New South Wales, which has excellent opportunities in Wagga Wagga, in Albury Wodonga, as well as Dubbo. I know people don't talk about these locations that much on the internet and on YouTube, but you need to be intelligent about the way you invest. Sometimes look where other people aren't looking. Look at the opportunities that lie in these quiet areas that aren't growing but have good fundamentals that solidly back it up. Like Albury Wodonga has a great economy. Bendigo, an excellent economy. Ballarat has a very good economy. It's just on a falling knife at this point in time, but it will bounce back. And this is the time when you can secure absolute great properties in these areas. And I think Victoria holds a lot of value, and I think you should consider there as well as in regional New South Wales. But if you're sitting here trying to pick the perfect location between New South Wales and Victoria, that will come down to your personal strategy, your associated risks with it, and where you should consider investing into, and what your appetite is. But I don't think Victoria should be a deal breaker simply because of land tax and tighter tenancy laws. That just means you have to be better at selecting the right property and managing your finances, and you can make a lot of money. And if you need help with any of this, this is why you join the private network of community of investors. There's over 140 members. We are helping each other out on a daily basis. This is what I'm here for. This is what the other community members are here for. So we are looking to help you on your journey, and I know I can help you secure great investment properties.